All right, folks, I want to get to here is the most important part in dip buying. This is crucial. Okay, I'm going to do it both for option traders and for regular traders who just trade the stock. Even forex and other types of crypto or anything of that nature, any type of asset. The dip buy is always important, no matter how you trade. Now, how do we know where this is going to dip to? Well, right now, as the market opens, there's 3 to 4 ways we can find out. I have a simple moving average here, and I have a longer time frame moving average here. And what I'll do is I'll go in my studies here. You can see I have a 15 simple moving average and a 50-day simple moving average. Now, I can use that as temporary support for the 5 minute or the 1 hour or any type of thing. And I could say, okay, if we're going to open here and we're going to dip and we're going to kind of guess where the dip is going to be at, it might be on that 5-day moving average, where because we had support coming in here, we had support coming in here, we had support here because it dipped and ripped here, and you can see it's following a trend. It never broke that moving average here, the 5-day moving average. However, at some point we're gonna break this moving average and head down, but we'll come right back up. Now, also, you can use the past major support levels as a dip buy reference. But when you're following a trend, you usually want to follow the more intraday supports rather than the major technical level. So we'll go back to the one-year daily chart. We're at an all-time high, so you can't really be trading like a swing trader here and trying to get a good position on a dip buy at this point. You want to be looking at, okay, major support levels here would be 195. See, look at the horizontal line of my cross. That will tell you, hey, this, right here, this level here would be support and resistance. This is usually where we couldn't break out to, and now we've broken out. Now, we're expecting to hit the resistance level of 400. And there's also a support resistance level right here, because what? We looked at the past. You see there was support here, and there was support here. And it also broke down right here on this third day and came down here. You can see that. Pay attention to the cross. You can see how it was support here, and now it became that resistance and started dropping lower. So knowing that, these key levels are crucial to know where support and resistance is at. If you can actually draw a line through here, wish I could draw a line through here, like this. Here we go. Draw a line like this. Not straight, but you can see I'm actually drawing support and resistance lines right here. Okay? These are major support resistance lines I'm drawing right here. Okay? These are crucial when trying to, time your dip buys and stuff like that. And here's another support resistance level right here where it couldn't pass through. Consider that right there. That would be another support resistance line. So obviously we need to break through these levels and head higher. So let's go back to the 5-minute. Okay? Look at that. As soon as I drew it and I came in, you can even see here how we started to break out, go up here, and the next thing you know, it's respecting that line right here, and it bounced off of that support resistance level right here. This was temporary resistance at the time, and finally, look what happened, how it reacted as soon as it broke that level. As soon as it broke that level, we started heading higher, and then next thing you know, the next morning we gapped up. Now, what did I say about gap ups? There's always going to be day traders. They're going to come in at certain key levels. So let's move this back at the open. Look how it respected. Remember, this was resistance. Now at the open, look what happened. It became support. You see that? How it just, as soon as the market opened, people start selling off. It bounced right off that resistance level and started going back up higher. So what you call this is a retest. Even though you broke out, it was a retest. And now since it retested and bounced off it, it confirmed that that was support. And now buyers are getting confident and volume starts to pick up, and then you'll start having more of an uptrend. Now, we're going to go back to this candle, so we're going to reset and go right to that exact moment of when we dipped there. So we're going to go to 9:26. We're going to go back to 9:26 in the morning. Actually, let's fast forward a little bit. Hold on. Got to fast forward a little bit because this literally happens in an instant. So let's say 9:32. See if that would work. No, okay, no, we're still at the dip on that. So we're gonna go to. Let's just go to the opening bell. One of the main things you need to be looking at as soon as the market opens, knowing that there's an uptrend, is all right. We know we're going to spike. We know there's a resistance level right here. Well, now became support. I want to see how this is going to react to this support level here. Okay. So how do I do that? I had to look at the level 2 down here and the time in sales. This is the time in sales. Shows me the transactions. Right now it's not working for some reason. And the level 2. Okay. Level 2 is very crucial because it tells you everybody who wants to buy. You have your exchanges here that has all the orders for the buyers, and you have the exchanges for all the sellers over here. Now, one of the key, this is the bid size. BS means bid size. AS means act size. The lowest bidder over here on the left side is the person who wants to buy. Well, the highest bidder, is always on this side, and it's the person who wants to buy it. Wants to bid for the highest price will always be here. And then you have the asker. Asker is the person who's willing to sell at the lowest price on this side. Now, the market maker is always trying to make a transaction by making the highest bidder and the lowest seller combine and make a transaction, which would create an execution. One of the key things when dip buying, you're starting to see that dip and then rip. One of the key things you want to see is you want to see stacking action on the level 2. So stacking meaning, for example, all prices start to meet at the same price. So you'll see here right now it's 261, 262. You want to see this all say 262 all at once, where all exchanges are asking to buy at that level. That tells you their support. See, you're starting to see more of numbers starting to match each other. When they start matching each other, that's stacking action. Okay? Now, if I were to bring this level 2 up more, maybe you get a little more insight on it, what's going on. We can say this is happening here. I want to just go back and timing that exact dip so that way you get the good entry. So we're going to go back again. Let's go back to 9:31 because I was over here explaining it, because this is how quick it happens. It happens during this time. It doesn't happen when it turns green. It happens when everything is red. You need to be looking at that level 2 down here and saying, hey, not financial advice, by the way, but you need to be saying, hey, is it rejecting that resistance level that I made? All right. It has to literally. It happens so quick. See, it happens so quick to the point it was hard for me to even time it. I have to go back again. That's how hard it is to catch that exact bottom before it rips back up. So we're going to go back to 9:30 again. All right. And we're going to look at how it's reacting. Okay, so candle's about to dip and hit that line. You're looking for stacking action right there. Okay. Look at that, 260, anywhere near 260. Seeing the level 2 on the left side. All right. 262, 260. Watching it. Bid is 260, 261. It's not doing anything. So I'll pause it right there. If you're seeing that it's having trouble trying to break this level, now is the time to make a decision and say, hey, it's not breaking that level. It's taking a couple minutes to break that level. And now you have to decide how much of a position size should I put in there just in case this falls to the next support resistance level. So to go back to the daily chart, well, how far can we fall back? Well, we have to look at the previous support resistance level, which would be right here. And draw a line right through there. All right. So if we go back into our 5-minute, if this were to break, we're going to head to the next support resistance level, which would be around this 200 level here. So you have to say to yourself, all right, if I were to jump into this trade and I were to buy this, my risk to reward has to be more than 1-to-1. So my risk would be that, hey, I need to get, if I get in and I lose and I'm wrong, the maximum it's going to go is about 200 bucks. But I want to size myself. I don't want to put too much of my position in and lose a lot of money. You know, as a stock trader, I don't want to do that because I don't want it to drop all the way down to 200 and, you know, I have a big position, I'm losing a lot of money because it's going to suck. And, you know, what if it keeps going down further? You don't want that to happen. And what you want is a 2-to-1 risk reward, where if you're correct, you're expecting this to break out and head higher, up to past 350 and higher than that. So the 2-to-1 would be 1, 2. That would be two levels, 2 channels. You'll let that thing ride, or even more than that. As a day trader, as a swing trader, you got to think on a more macro level. Hey, I'm trying to get a 2-to-1 risk reward. If I'm wrong on this GameStop trade for a while, you know, my biggest loss would be this goes back all the way back to $3, or it goes up higher. But in this situation, we're going back to the 5-minute again. I'm only going to put in a small size. I would say, let's just say 500 shares. Well, sorry, that's too much for your average trader. I mean, who's trading this? But let's just say 300, 200 shares maximum. Let's say you put in like half your paycheck or something in it. All right. So we're going to unpause this and we're going to buy it at market. Is that a confirmation right here? I just bought it. All right. I bought 300 shares of GME. All right. So market open. I got a market order because that way I could get my order filled immediately and executed. Now, I just bought it. There's a little lag going on. You can see like how quickly you're up or down just on this volatility. This is my basically the size of my trade. Position long 300 shares. Average price I got it at was $365. And you can see, okay, currently I'm making 1,755 bucks, right? So now we start to head higher. And remember, I'm only just putting a little bit in. And I'm waiting for, I'm looking at this like, hey, I'm looking at this like a day trade. I'm not looking at this like a swing trade, but more like a day trader trying to time that dip and rip. So I'm trying to get the 2-to-1 risk reward out of this, okay? So as you can see here, and we're not even going into options. I'm going to get into options in a second, and in the next part of this section on dip buying. But you can see, even as an option trader, the IV is high. The implied volatility is high. It's around 337%. And how I know that is because if I go back on the daily chart, look at the IV compared to where it was. It was like around 190 prior. Now it's 300. It's mid-level. I don't want to buy options here because the contracts are too expensive. I'd want to sell premium here. So the selling premium strategy and short selling options. If you were to go to the option chain, let's go to the option chain here. If we were to go to option chain, let's say you wanted to sell premium here. I'm going to sell premium also. Let's say I wanted to sell. These options are expiring soon, so let's say, well, no, I don't want to do that one. Let's just say we're due the week after. Let's say March 19th, okay? I'd want to, in a situation like that, I'd want to sell any of these options here that are any of these puts here and try to sell them both. I'm going to do that in a later video because today this type of day was not the day to actually be be a put seller, and I'll explain why. Because this is the day when they crashed the damn thing, and it was better to get puts, protective puts. So we're gonna go back here, go back to the 5-minute. All right, and we're gonna go right here. So currently we're up 3 grand. I'm gonna fast forward a little bit. So fast forward throughout the day. So we're gonna go 15 minutes forward. So you can see right here, we're starting to hit resistance, temporary resistance, right? We didn't even reach that major resistance level. We just reached a regular resistance level here. Okay, it's pre-buffering the time and sales. One of the main things about a wall of buyers and wall of sellers